Hey guys, what's up? This is Francisco with Valareso Capital, and today we're gonna do the market update video. I hope that everyone had an amazing week and weekend, and that you're ready for Monday for the market. So let's start. In this video, we're gonna take a look at what the market is trying to tell us. We're gonna take a look at the Nasdaq Composite. We're also gonna take a look at some other major indexes, and then we're gonna also take a look at the UVXY, HYG. We're gonna take a look at gold. And we're also going to take a look at bonds, which I think are a really interesting product right now. Remember that this video is for informational purposes only, and that everything is based on my personal opinion, guys. So it's not financial advice. So now that we got that out of the way, let's start looking at the charts. In my screens right here, you can see that I have the ISIC, which is the Nasdaq Composite. That's the ticker symbol that we have in TradingView. And you can see here, this is a lot of what we were talking about is starting to happen, right? In the last the last weekend video that we were talking about, we were actually looking for these to find some resistance around this 13,100 level. Why did we mention that level? Where we were seeing that the 0618 level, which is this blue line right here, measured from the high of April all the way to the low of June. So let me just show you that level pretty quickly right here. If we just step back here a little bit, this is actually the high in March, right? You can see that the high that we had in March measure all the way to the low that we had in June. If we measure that retracement, that 0618 retracement, which is a major Fibonacci level, came right there at that level right there, right? So we were watching that level. That level tends to be really important, especially when we have a strong move to the upside or to the downside, and we're looking for a retracement or a counter trend rally or counter trend pullback. That level tends to be really important, and I have seen throughout my years in trading that level keeps showing up as resistance or as support. So always be aware of that level. Always have that level on your charts. I think is a critical level, and you can see that we stop right there. Coincidence? I don't think so. A lot of people are watching this level. A lot of traders, a lot of funds are watching this level, and that's exactly where we found some resistance. Now, for anyone who's new to the channel, I have two indicators on my chart. I have the TTM squeeze, which basically helps me to find momentum and also compression in price, meaning that this helps me when we have these black dots or red dots. That tells me that we have a contraction in the volatility, and that contraction tends to lead to expansion. So that's exactly what happened. We have some contraction right here, and then we have a pretty strong expansion to the upside. And then the indicator that I have on top is the trend oscillator. And this trend oscillator is a momentum trend oscillator. So basically, what I'm looking for the black line to be above the green line when we're trading to the upside, and when we're trading to the downside, I'm looking for the black line to be below that line, and then it turns red. Also, the 50 level is pretty important, which is the level right here, which is this middle line right here. Whenever we're above that level, that means that there's more positive energy, bullish energy in the price, in the stock that we're looking at. And when we are below that, tends to suggest that there's more negative energy or bearish energy, basically that bears are in control. So this has proved to be a really useful indicator in my analysis. So now let's go quickly into the charts. Right here, you can see that we actually have a higher high in comparison to this day right here. But you can see that the trend oscillator, which is this momentum indicator, actually made a lower low. And then after that, we're starting to have a pullback, right? We pull back into that 8 exponential moving average. We had an inside day, but the momentum was already going to the downside. Now we broke this line. You can see that we found support in this line many times, and now we broke it. So as soon as that happened, my expectation right now, and let me just take some lines out of the chart. Let me just hide these quant pivots, and I'm also going to take out the zigzag line. That way we can see price a little bit more clean. Now that we broke that EMA, the next stop for this momentum indicator is the 50 line. And if we take a look at price, you can see that price, if we measure the retracement from this swing low to this swing high. This is the 0618 level, and we actually close below that level. So my expectation is that we are going to test this 21 exponential moving average. And if that exponential moving average doesn't hold, I'm looking for a retest of this breakout level right here in the Nasdaq Composite. That breakout level is going to come somewhere around 12,400. And I think that will be a great level for us to retest that level and then continue to the upside, perhaps to test 13,400 or that 200 daily in the Nasdaq Composite. So my expectation for the Nasdaq Composite is that we are actually going to continue to see a pullback in the Nasdaq Composite. I don't think that we're just going to launch higher. I wouldn't be surprised if we actually have a green day on Monday, but we find resistance at that 8 exponential moving average. And if we find resistance at that 8 exponential moving average, I'm looking actually for this test of that 21 exponential. Now, let's take a look at the SPY. And the SPY has pretty similar action, right? Pretty similar action. You can see the squeeze right here. You can see that we move above the 50. We retested this breakout level, and then we had a really strong move to the upside. You can see that we flag into that 8, and then we continue our move to the upside. Now, you can see that we were trending above that EMA in the trend oscillator, and now what happened? We broke below it. The moment that we broke below it, and you can see that the momentum in the squeeze is also starting to roll to the downside, I'm looking for a test of this 21 exponential moving average, which will also coincide with this breakout level right here. If we happen to come back and test this 21 exponential moving average, I think that there's an opportunity to buy the dip and then look for continuation higher into September. If this level doesn't hold, then I'm looking for a retest all the way down to that 50 daily, but we have to take it one day at a time. And now what I'm looking for is a test of that 21 exponential moving average, which we haven't tested since we started this rally. So that's what I'm looking at the SPY. You can see that we also find resistance right there at that 200 daily. And that's a pretty important level, right? That's a pretty important level, because if this continues to be a bear market, then this is going to be the best opportunity that you have to open short positions and then look for this to continue lower. Now, given that the momentum is positive, meaning that it's above the 50, I'm looking for that 21 to act as support, at least in the first test. Let's take a look at the QQQ. And the QQQ is pretty similar to what we saw in the Nasdaq Composite. Remember that we mentioned the 0618 level. This 0618 level is also measured from the high of March to the low of June. You can see that we found resistance right at that level, and now we're pulling back. You can see that we also had a divergence in the momentum, and you can see that this has been, right, the momentum was testing this level of support, and now we broke it. That's a change in character. So if we have that change in character, we should expect at least a test of the 21 exponential moving average. And if we continue to move lower, then I'm looking for a test of this breakout level, which is somewhere around 314.50. That's what I'm going to be looking. So the expectation is that the pullback is going to continue. I don't think that this is enough. At least that's not what my indicators are telling me. So I'm going to be waiting for a test of this level right here, or at least the 21 exponential moving average, and then perhaps we can continue to move to the upside. Now I can show you the DIA and the IWM, but they basically are showing the same thing. So let's just jump into gold really quickly here. And what is happening in gold, I think, is pretty interesting. I think that gold is just going to continue its downtrend. You can see that the downtrend in gold started a while ago, right? You can see here we had this crazy move to the upside. Then we had kind of this consolidation base, but you can see that the momentum indicator was starting to roll over here. Right here, we broke that 50 line. Price also broke below that 50 daily moving average, and now we were below that 50 midline, and then price was just consolidating lower and then continued to the downside. So that's pretty powerful about the indicator, which is the trend oscillator. And you can see right here, right, we were talking about this. This is again the 0618 level. You can see that this was measured from this high right here all the way to this low right here. You can see that the 0618 level came right here into the supply zone. You can see that gold had a counter trend rally all the way to that 0618. You can see here that momentum was starting to roll over, and now we broke below that midline again, and then prices are starting to move to the downside. So right now in gold, if you want to trade gold, I think that any rally into that 21 exponential moving average and any rally into that midline of the trend oscillator is going to be an opportunity to short this and then continue to look gold to the downside, perhaps at least to test these down levels right here. So that's what we have in gold. And if we take a quick look at GDX, GDX is actually showing the same thing, right? You can see that GDX didn't even touch that 50 daily moving average. You can see that we came all the way down. We came here, we kind of set up a pretty strong bear flag, and now we're breaking below it. You can see that the momentum was starting to roll over before price, and you can see that we have a squeeze that is starting to roll to the downside, and now price most likely is going to make new lows in GDX. So that's what we're watching in gold. Silver, pretty similar action, right? You can see also that in silver we have the 0618 level. This is what I'm telling you, that the 0618 level is a pretty strong level. You can see from this high that we had in June all the way to this low that we had in July. You can see right here the 0618 level. That's exactly where we found resistance. And as soon as we found resistance, momentum started to roll over before price. And then that's exactly what happened. And price is starting to move to the downside. That's what's happening in silver. And now let's take a look at bonds, which I think is pretty important for the analysis that we're gonna make into what is actually gonna happen with tech. Because and let me just show you this pretty quickly. Let me see if I have the picture here. This is usually the business cycle that we experience in the market. And usually what happens when we're starting to come into the first stage of the business cycle, what actually moves first is bonds. So you can see that usually the business cycle started to contract a little bit, but bonds, since remember that the market is the market usually moves taking into consideration what is going to happen 6 months from now, 1 year from now. Usually bonds start to move first. So we want to see those bonds start to rally, right? We don't want to see bonds move to the downside, because most likely bonds continue their downtrend. The stocks that are going to be more affected are going to be those high beta stocks, those growth stocks such as tech, right? So we want to see bonds starting to move to the upside. And usually when bonds start to lead a little bit, you usually see that stocks starts to follow. And those stocks are usually growth stocks, tech stocks, and those stocks that offer a really good beta and a really good alpha for us to trade from. And then we usually see commodities follow stocks and bonds. Then bonds peak, commodities start to continue to go higher, then stocks peak, and then commodities go higher. And that's exactly what we saw, right? That's exactly what we saw happen recently. And now we want to see the reverse. We want to see bonds starting to flatten out and starting to rally. So now what is the pattern telling us in bonds, right? You can see right here, bonds, we have a lot of resistance level, but basically the primary resistance level is somewhere around here, somewhere around 120. And you can see, yeah, bonds, we could make an argument that bonds are starting to put a head and shoulders bottom information. But for now, as long as this momentum trend oscillator is below the 50, I have to give it to the bears, right? And you can see that price right here, we had actually a gap down below that 50. And as long as we don't we don't reclaim that 50 daily moving average, and this momentum indicator doesn't form higher lows and move above the 50, then I have to wait in order to buy stocks, right? I have that's what my system is telling me. And we have to see, right? But something that I want to show you is that if we measure from this low to this high, the 0618 level comes right at that level right here. So is that going to be support? Maybe it's not. We will have to see. But if bonds are able to find support, if bonds are able to reclaim this 50, retest it, and they start to move higher, I think that's going to be a pretty good indication that stocks are actually going to continue their rally. If bonds failed, and this is just a huge bear flag or a huge distribution base, then I think that we are going to have another leg lower in stocks as well. So I'm using bonds as my kind of one of my indicators into what is actually going to happen. Now, if we take a look at HYG, for anyone who doesn't know what HYG is, basically these are the high yield corporate bonds. So basically all these junk bonds. So they kind of tell us what is the risk appetite in the market. So you can see that we have been in a pretty strong downtrend in HYG, and you can see that we are starting to reverse here. What do I mean by that? You can see that the trend oscillator, right? The trend oscillator went above the 50, actually stayed there for a while. You can see that we came above the 50 line, but we came straight down here. We were unable to go above it. Now we are above it. However, we're starting to roll a little bit over. You can see here the price continued to go to the upside, but the momentum was already going to the downside. And that's exactly what happened, right? Price came. Usually what happens is the momentum structure changes before price structure. And that's really, really important to understand. Usually momentum, I want to repeat that. Usually momentum structure changes first before price structure. So you want to have a momentum indicator. That way you're not sucking into these pullbacks or into these thinking that this is going to break out. And then all of a sudden you're trapping this. So when I'm actually looking for HYG, usually the price pattern that I'm looking for is that we already move above that 50 line, which is the purple line here. We move above it. Now I'm going to look for a retest. Are we going to be able to retest that 50 line and then continue to the upside? That's something that I'm watching. And also, as you know, I love the 0618 retracement. If we measure from a Fibonacci retracement from this low to this high, we have the 0618 level right at that 50, right? So if we're going to test that level, perhaps base for a little bit, you can see that this momentum indicator goes up, finds support at that 50, and then continues higher, then that's going to be a pretty good indication also for stocks. So have these on your charts. If you don't have the momentum indicator, it's fine. But use this 50 line and the 0618 level, basically the 76 level, as an indication if we're actually going to find support in junk bonds, meaning that we're going to see more risk appetite in stocks as well. So I think this is a really important chart. And now let's take a look at UVXY. These are basically the kind of the volatility index, right? We have the VIX. I use the UVXY. I find it easier to chart it, so that's why I use it. And you can see here, we were actually talking, if you follow me on my Twitter, I was talking about this, right? We had a divergence. You can see here the price continued to go lower, and we started to base a little bit, but the momentum was already going higher. So I'm going to repeat what I say. Momentum changes the structure before price, and that's really important to understand. So you can see right here, I have another example. You can see that momentum was already going higher. Price continued to move lower, and then what happened? We had a pretty strong move to the upside. So that's what's happening right here. And you can see that in this downtrend, we were finding resistance at that EMA, and now we are above it. So we are above it. You can see that in this move to the downside, we were unable to close above that 8 exponential, and now we closed above that 8 exponential moving average. So what I'm expecting at least is a retest of this 0618 level, which is measured from this level to this level. Let me just put I had a YouTube video open in my screen. Now you can see, going back to the UVXY, you can see here that we have right, we have this high to this low right here. I have the 0618 level right at this point. So I'm expecting at least a test of this level. If we're able to test that level and then fail, then perhaps the rally will continue. But also, I wouldn't be surprised if we actually want to go a little bit higher and test this 50, right? Because we have tested this 50 before. So is UVXY going to have a really strong move to the upside and test that 50? I think that would be fine. Perhaps that way momentum can retest that 50 line and then continue to the downside. So as long as the momentum indicator continues to be below 50 and price in the UVXY continues to be below that 50, I think we're fine. I think that a continuation to the downside, to the upside in the stocks can happen. But also remember that if this is going to rebound, then we're going to continue to see a pullback in stocks. So I think that's really important to understand. And then the last chart that I want to share with you is ARK. Let me just clean this pretty quickly. The last chart that I want to share with you is ARK. And we were talking about this too, right? We were talking about how ARK was basing basically below this 53 level. And you can see that we actually had this kind of pattern, right? Higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And now we broke that, right? We broke below this level. We make a lower low. And you can also see that the momentum indicator is below the 50 and that price closed below that 50 daily moving average. So Is this just a major bear flag, and then we're going to continue to see a pretty strong move to the downside in ARK? I think we have to be open. If that is going to happen, it's going to be entirely tradable. It's going to be an amazing opportunity to trade, because this basically was just a short covering rally, and then we're going to see a nice trend to the downside. I think that's going to be awesome. If not, if we find support somewhere around these levels, this 42 level, I think there's an opportunity for ARK to base a little bit and then continue to the upside. So we have to be open to any situation here. I think that anything can happen. So I think that we have to be really, really aware of that. So basically, what is my outlook for next week? My outlook for next week is going to be patience. I think it's really important for us to wait for the stocks to pull back a little bit, at least a test of that 21 exponential moving average in the Nasdaq Composite, as we talk about. I don't think that you just go in and buy everything if we test that 21 exponential moving average. I think if you just give it a couple of days, and if you start to see that the 21 exponential moving average is actually holding, we're making higher highs or something like that in a couple of days, then I think that the pullback is going to be viable. But I think you can get your feet a little bit wet by buying a little bit of stocks in that pullback. Have a very strong list of stocks. I'm going to share my watch list in just a little bit. I'm going to make another video, so make sure to watch that one. And just be patient, right? Just be patient. We're going to have a lot of opportunities to trade. And if this turns to be just a bear market rally, be ready to trade it to the downside, right? Be ready to take the other side of the trade. Be ready to short ARK. I think that ARK is presenting many opportunities to short if this happens to be just a bear market rally. So thank you so much, guys, for watching. Please make sure to like and subscribe. And I wish you the best of luck for next week. So thank you. Bye-bye. Peace.